So last time, or until the last video, we only spoke about withdrawals of goods, and so that you have a business asset and then you completely take it out of the business and turn it into a private asset. However, there is still another possibility, naturally, because instead of taking the asset completely out of the business, you could also just temporarily use it for private purposes. It would stay a part of the business property, but now it's used, let's say, for an hour for private purposes, or it's used for 99% of the time for private purposes or so. And then if you think about that, then you see that if you just withdraw the asset from the enterprise, what you do is basically then all the future usage is withdrawn with 100% of the capacity. Now, if you just let it stay a part of the business property, but remove or use it 99% of the time for private usage, that makes nearly no difference. If you use it with 98% of the capacity for private usage, then that also makes no difference. 90%, I think, also makes no huge difference. 80% is again only a slight difference to the case, which makes nearly no difference. And so you could go down and down. Even 30% is not a principal difference to the case where you remove an asset from the enterprise. Now, the only thing is, now you just remove 30% of its potential services for purposes outside the enterprise, whereas in a classic withdrawal of the complete asset, then you remove 100% of the remaining usage capacity. But in principle, you can see here that this is just gradual small differences. And that means that basically for the withdrawal of a use, that we use an asset, that's a withdrawal of a use from the enterprise. In plain words, if you use an enterprise asset for an hour, 2, or for 3 days or so for private purposes, then this is basically only gradually a difference to the complete removal of the asset. And so we must find a solution which reflects that this is gradually the same phenomenon as taking out the whole asset from the enterprise. So no strict line can be drawn between all these cases, and so the treatment of all these cases should also only gradually differ and should basically be the same as the withdrawal of the complete asset. So it seems to be the best solution to say, if you take a service out of an enterprise, if you use an asset temporarily, also that should be treated as a withdrawal of that service, and it should be treated in a way that it reflects how much of the usage capacity which is left or so is subjected to tax. For example, if we say the tax base for 100% complete removal of an asset, that this is the same as using 100% of the remaining usage capacity of the asset, then taking it out for 1 hour or so should reflect an appropriate percentage of the total 100% as tax base. Well, that sounds a bit strange and abstract. Okay, we will have to learn it a bit based on examples probably. However, for that reasons, we need a rule which says if I just use an asset of my enterprise property once, twice or so for private purposes, this is also deemed to be a service and is deemed to have happened for consideration. So we make use here of the same trick which we had with the withdrawal of the complete asset. We just set up a fiction. Under normal circumstances, using my own property can't be a service. I can't allow myself to use my property because I already am entitled to do so. However, if we don't make a rule here, and if we don't tax that, then untaxed private consume would be possible. At least partly an asset of the enterprise would allow untaxed private consume. We have to close that loophole, and we do that by saying, if you use an asset of your own enterprise property for private purposes, that is deemed to be a service, and it's deemed to be for consideration, then we can go on applying the other criteria of number one, and everything will fit. We will end up with a taxable transaction. The next thing we have to determine is then the place of service. That will in nearly all cases be 3A1 because, well, 3A2 is the basic rule in all cases where my customer is an entrepreneur and acts as such. And now if I myself get for private purposes services out of my own enterprise, I can't be my own enterprise customer because by definition I take something out in my private quality. So 3A1 is the right basic rule. Could only be overridden if there is a special rule specifically applicable to that service which I withdraw. The tax base should be defined in a way that it's corresponding to that what I have in case of removal of the complete asset. The tax base here is the amount of all the expense related to that private usage as far as this expense has entitled to input tax deduction. And that is the parallel to the removal of the complete asset, because there we take the purchase price at the moment, so the price which 100% of the future usage capacity would still cost in the market. And now we think, okay, let's look to the expenses, the costs basically, which that good has caused. But as we only take into account parts which have entitled to input tax deduction when we withdraw an asset, then we also only take expenses into account which entitled to input tax deduction. So we have a parallel here. Yeah. This new rule is then again laid down in 10.4. This time number 2. Number 1 is the fictitious deliveries, and number 2 is fictitious service in form of using your own assets for private purposes. Naturally, expense will also have to include depreciations. Also, VAT cannot escape the conclusion that if you buy a house, a car, a computer, that not the payment for this, the cost of acquisition, immediately form expense, but that this extends or should be distributed over time. However, VAT is a European Union matter. One wants to have similar or even equal rules, and so and simple rules, because VAT must be practical in an easy way. So for the purpose of calculating the depreciation, the useful life of an asset, the member states are called up to limit the maximum useful life estimate for assets. In Germany, the maximum useful life of an asset which is movable, or better, which is not immovable real estate, is limited to 5 years. So if you buy a computer which has a limited useful life of 3 years, you can distribute the expense, the cost of acquisition for VAT purposes over the 3 years as usual. However, if you buy something which lasts for, let's say, 10 years but is a movable asset, for VAT you calculate the expense, the depreciation expense, over a time of only 5 years. In case of buildings, the depreciation period is limited to 10 years. These are the same limits as we know them from paragraph 15a for purposes of input tax correction. The basic idea seems to be that, especially after a long time, nobody has still the documents from the time of acquisition available, so that useful lives far over 5 years or 10 years would probably not be practicable, because in year, let's say 20, nobody has the necessary documents to calculate, if needed, the necessary VAT related depreciation amounts, because the underlying data have long time been lost. Well, we just memorized that depreciation expense for the calculation of expense here in the minimum tax base is limited to 5 years maximum useful life for movable and 10 years for immovable properties. Yeah, one important example where the private use of an asset of the business always plays a role is if the owner of an enterprise uses a car for private purposes. So let's illustrate the whole thing by an example. Let's imagine that we have an enterprise owner who buys a new car for 59,500. And naturally, this car has been acquired for the business, so the VAT is claimed back by input tax deduction under 15.1 number 1. So during year 1, we have fuel costs, we have insurance costs, we have car tax, we have inspection and repair costs, and so all in all, the cost of the car can be calculated. However, under our formula in the VAT Rule 10.4, number 2 says, please only sum up those costs which have entitled to input tax deduction. So we end up with depreciation, because the acquisition price has entitled to input tax deduction. You remember that the useful life is limited to 5 years, so a car will definitively last longer if it's not constantly driven by a drunkard. So we can reasonably just calculate with a fifth of the cost of acquisition. The fuel costs, well, they were also subjected to VAT, so there we had a refund claim, so fuel costs are added to the list. Car tax, well, it was a tax, and taxes naturally are neither a service nor a delivery. Paying a tax is not subject to VAT, so this position was an expense but is ignored for our calculation. Insurance costs are also free of VAT, so do not enter the calculation either. However, if you go to a car repair shop and have an inspection had and some repairs, that is naturally subject to VAT, so we have again 1,000 euro costs. If we sum the relevant costs up, we end up with 21,000 euro here, and that means we have a subtotal 21,000 euro. Now we look to the kilometers which have been driven, and I just looked somewhere, and so a figure fell down from heaven. It's 63,000 kilometers which we have driven with that car, and contained in these 63 was an amount of 10,000 kilometers for private or non-entrepreneurial purposes. So now we can simply make a cost calculation. We have 21,000 costs, and it's a net figure because we have added up all costs after input tax refund. So what comes out will immediately be a net figure. As one can easily see here, the cost per kilometer is 1/3 of a euro, so 0.33 and many threes euro. So 10,000, that means we have costs or expenses for the privately driven kilometers in our example of 3,333. And then the tax will be, as usual, 19% on 3,333. That will be here 633.27 if my calculator was not completely going wrong, which can never be excluded if you are a bit unconcentrated, but I hope it's true. Good. So this was the outcome. Naturally, in reality and in exams, one would have to approach the whole situation far more exactly, because naturally also here you would have to follow the standard testing scheme. So your first approach or your first step to a solution would have to be test 1.1 number 1. So we have to do with an enterprise. The activities are connected with the enterprise because the car here is an enterprise car. So there is the necessary connection with the enterprise range. It's an ancillary activity. It's not the main activity of the enterprise, but it is something which happens from time to time, usually in the course of the life of an enterprise, that their assets can also be used for private purposes by the owner. So that is sufficient to establish the necessary connection. Is it a service? Well, officially under the basic definition of 3.9, a service is something which you do for somebody else. That can't be accepted here. You can't say yes to that under the basic rule, because you don't do something for somebody else. If you drive your own car, you can't allow yourself to drive your own car because you already have the right to do so, and all that fails. However, we remember that now the supplementary rule of 3.9a comes and says, okay, I don't care. The system wants no untaxed consume. There would be untaxed consume if I don't tax the owner's usage of the car. So I just invent, or I just deem it to be a service. 3.9a, number 1, using an asset of the business for private purposes is deemed to be a service. And it's deemed to be for consideration. That's automatically also then checked with a yes. And the only thing you still need to determine is the place of service, 3A1. And yeah, any service which you don't let to another entrepreneur for that entrepreneur's entrepreneurial purposes. Well, and as I already said, you, the owner of the enterprise, are here not consumer in your quality as entrepreneur, because you want it for your private sphere. So you don't have an enterprise customer on the other side. You have no customer even on the other side. It's 3A1. It goes to the private sphere. So the place of service is where the entrepreneur has established his or her business, if not a special rule overrules that. We have, by the way, a special rule for letting cars for rent, 3A3, number 2. However, that is explicitly formulated as letting cars for rent, and a rental contract, that is something which the European Court of Justice determined some years, or more than some years ago. A rental contract, that is something where no legal system in the EU speaks of if you use your own stuff. And they just said exemptions have to be interpreted, or special rules have to be interpreted in the narrow sense. If the law just speaks of rental contract, then we can't say rental contract plus usage for own purposes. So we have to stay within the limit of what the law allows. That means by default it's 3A1 what applies here. And this is with a German entrepreneur usually in the inland, so it's taxable. The next question, is there a tax exemption, is rather quickly done with. There will be no exception in paragraph 4, so it's liable to tax. I ignore the theoretical possibility that the owner of the enterprise is completely blind and has less than 2 employees, because then it would probably be a bit difficult for the owner to drive his own car for private purposes. So we can reasonably say there is no tax exemption available, so it's liable to tax. Then we need the tax base, and you remember there is no actual payment, so 10.1 fails. We can't say gross payment minus VAT included is net payment. So we have to hop over to 10.4. Number 1 doesn't apply because it's not the complete withdrawal of the complete asset, but it's 10.4 number 2. The cost of the service which have entitled to input tax refund claims. We had calculated that before, 333, so yeah, take that over. Tax rate and tax amount is easy. It's again 19% because there is no reduced rate of 7% for using a car. So 19% on 3,333, so 633.27 is probably the tax. Formal aspects, taxpayer is the entrepreneur as always. Well, there is nobody else who comes into the question even. The arisal of the tax is, as we said, at the end of each preliminary declaration period during which the services occurred. You remember this was now a specific rule 13.1 number 2 and not number 1, because the regular rule allows you, if you are a small and medium enterprise, to choose between the regular mode of payment, so when the service has been done, or the cash flow based paying. This is not possible. This option does not exist if we speak about withdrawals, because there will never be a payment, and so there we have the special rule of 13.1 number 2. Invoicings to yourself make no sense and would also have no function, because as you get the service in the function of you as a private person, there is nothing to gain from an invoicing document, because there can be no VAT refund claimed. So declaration duties is nothing special. You just fill out your usual tax declaration. Peculiar aspects, none. And input tax deduction here, please remember that as the output is now fully taxed, naturally we have an output which is fully liable to tax, and that means whatever has been deducted as input tax years ago, yesterday, or in the time between years ago and yesterday is not cancelled but stays unchanged, because all these input things have been used for fully taxable output, and that means you remain fully entitled to keep your former input taxes. And naturally, the tax paid on the withdrawal leads to input tax nowhere, because you get it in your function as you get the service in your function as a private person. So private persons don't get input tax refunds. That is also a clear thing. We might vary the example a bit. Imagine you had this car bought secondhand from a private person. Or another case where the car would not have entitled to input tax deduction would be if the owner of the enterprise bought the car at a time when the owner still was an employee. So it was not the owner of an enterprise. Then he got it. He bought it in his function as a private person. And then you never have any right to input tax deduction, not even later. When you contribute the asset to the enterprise. in that case, the input tax is simply lost. This has then consequences for the computation of the costs here. Imagine you buy a new car for 50,000 plus 9.5. However, you are not an entrepreneur at the time, so you can't claim input tax deduction. Later, at year 2, you open an enterprise and begin to use that car now for business. So you contribute to the business. It becomes a business asset now. However, no VAT for the value of the contribution is refunded. That means if in that year the car drives 63,000 kilometers in total and 10,000 kilometers are driven for private purposes, then the tax base for the 10,000 kilometers is now slightly different because depreciation for the car, no, because the cost of acquisition of the car this time did not entitle to input tax deduction, and the formula is we just take into account those expenses which allowed input tax, and so price of acquisition, no input tax, so not taken into account. Then we only are left over with the fuel costs, the insurance costs are out, the car tax is out, the repair cost. So we only have current costs of 11,000 for all the 63,000 kilometers. That is per kilometer a very, very low amount. If I'm not completely mistaken, it's 17 cents or 17.5 cents approximately. I hope that's right. Now you had 10,000 private kilometers. That would be 7,460 cents. Yeah. Hmm? And 7,460 cents is 174.60 euro. 19% of that is astonishing 33 euro approximately, so a far lower amount as in the example before. Now in practice we often have a problem when it comes to the application of the rules to cases where an entrepreneur also uses a business car for private purposes, because the problem is first to find out the exact amount of the privately driven kilometers. Usually you need a kind of a logbook for these cases where you basically have a list which kilometer was driven for which purpose. So you must see that, or you must imagine there that in such a business car you have either a handwritten logbook or some electronic device which or where you register every individual case where you use the car, kilometer where you start and kilometer where you end, so that you have a full protocol showing the use of the car. And each travel with the car or each usage of the car has to be commented. If it was for private purposes or if it was for business purposes, then there must be details which allow to check if that travel or if that use has really been made in the way which you noted down there. Whenever this logbook is not kept exactly enough, the fiscal administration will doubt its exactitude, and then one will have to think about other solutions. Furthermore, if you have several cars in a firm, the next requirement is you do not only need the cost of all cars, you need the cost precisely of this car in order to be able to make that cost calculation. So if you can't correctly and convincingly separate the costs for cars in a way that you know which car costs exactly which costs, then you have a problem which also makes it impossible or difficult to practice the official or the correct method. What do you generally do in taxation if you don't have the necessary data to calculate the tax base? Well, then the fiscal authorities will have to make an estimate. they will have to guess what probably an adequate tax base would be. And for this purpose, in Germany, as the case is so frequent, here the legislator has set up an estimation rule for the private usage of a car if no exact data are available. That is something which in Germany nearly everybody in the field of taxation knows. It's a famous 1% rule. How that works is shown in an example. The idea is that even in another legal text, namely in the Income Tax Act, the gross list price of the car at the time of first registration is taken as the basis for the estimate. The gross list price is, surprise, the official price recommendation which is made by the producer of a car, and it's usually higher because it doesn't include any discounts. It's higher than the actual cost which you pay to a trader. So might be that you have an official list price of 50,000 and in the end you get it for 40 or so. However, that is the official price which is advertised by the factory or their network or their distribution channel. And naturally, later you negotiate for discounts and special things. However, that gross list price is now the basis for the estimated value of private usage, because the basis is 1% per month is taken as the estimate for all costs of private usage of the car. That follows from an estimate which we have in the income tax. However, this is under the income tax the estimate for all costs of the private usage. And now, as we have seen in VAT 10.4 number 2, we don't need all costs. We need only those costs which entitle to input tax deduction. That is also known to the fiscal administration of Germany. So they say, okay, our tax base for VAT for the entrepreneur must be lower, but how much lower? And they just said, well, lower is here 20%. Now, if you think it's more than 20% lower, then they would probably say, hey, it's our estimate. We decide how we estimate. And if you want to disprove us, then there is a simple way. Give us an exact cost calculation and give us an exact logbook. And as you don't have that available, simply shut up. The difference is estimated by us to be 20%. So in that case, when you need that standard estimate, you would take the gross list price, let's say 67. Might also be 70 or nobody knows. If it's 60,000, then 1% per month is 600 euro per month. This is now a net amount, by the way, which is estimated here. 20% discount is minus 120, so we stay with a tax base estimated at 480 euro per month, and that leads with 19% to 91.20 euro in total for the value of the private usage of the car by the owner of the enterprise. Well, same rules would apply if the owner doesn't withdraw the usage of the car for himself, but as you know, allows his personnel, his staff, to use the cars of the firm for free for private purposes. However, that would require that he really and actually allows using the cars without consideration, so that the employees do not pay in any kind for the permission to use that car. In such a case, when he is really generous, then we walk the same way, 3.9a, and place of supply, as always, probably 3a, and things are taxable. However, the Germans, are always exactly analyzing things, and so the German administration and the German courts traditionally hold the view that employers never give something away for free, at least not in that situation. If you regularly can use a business car for private purposes, then this will usually be taken into account as an element in your salary negotiations. So what basically happens is, instead of giving you a salary rise of, let's say, 1,000, might be nice, yeah. However, happens rarely. But in case you negotiate about salary rise, then it might be that employer says, instead of 1,000 salary rise, you get 300 salary rise, and you don't need a private car anymore. I allow you to use the car of the business for private purposes the whole time. I pay all the costs of that car because it's a business car. You have the permission to use it, and that's the reason why the salary rise this year is smaller. So basically, there is an exchange of cash against the permission to use the car. Basically, what you do, you pay for the permission to use the business car for private travels by working more, working more exact, working better, or working harder, and renouncing on a higher salary rise. So that's the reason why, at least on the German perspective, the permission to use a car for private purposes by an employee is usually classified as a genuine service. Yes, this is a genuine service because I, the entrepreneur, now allow somebody else to use my car. That is a service which you do for somebody else. That is a service, 3.9. You don't need a fiction. And it's genuinely for consideration because the worker pays for it by better work, more work, harder work, and so on. So I get something in return as a gross payment. The only practical difficulty is now that the gross payment made by the employee is now the market value of the employee's additional work, and you will have a problem to estimate the market value of the additional working time or what else. On that, we will probably talk during a later video. Well, so that one can suppose that an employer lets a car for a private occasion for free to an employee can only happen in very extraordinary circumstances, especially in rare occasions which were not taken into account in a wage negotiation. For example, you work in a car, you work in a firm, they have a truck, now you intend to move, and you ask your employer, boss, I'm going to move to a new flat in a month, and you know that will be on the weekend, and you know our trucks are not needed on the weekend, and is it possible that I can have one of our trucks for my moving, because you don't need them on the weekend? Then boss might say, yeah, okay, take it on Friday in the evening and put it back on Monday morning. I trust you that nothing is damaged, and I'm fine with that. This would be such a rare occasion that nobody could expect that this was not really a generous act by the boss, but that you paid for that by renouncing on salary rises or so. So that would be genuinely for free and would be taxed under 3.9a and 10.4, whereas the other case would be taxed under 3.9, and the tax base would be the gross amount which you pay, that is the market value of your extra working hours, which you do in return for the right to use the car. So, yeah. Last but not least, When you hand over goods to any other person for free, that also triggered withdrawal taxation. With a service, that's not the case. If you offer a service for free to persons who are neither yourself, nor closely related persons, nor members of the staff or their family members, then there is no rule that this service must then be taxed at expense or so. So you are perfectly allowed to render services for free to all outsiders of the firm, which means, yeah, you can show generosity in doing things like a service. An enterprise can, in this way, give some advice or anything else like service for free to regularly customers, and that doesn't trigger any special withdrawal taxation. Otherwise, we would also have problems. Naturally, you remember that in case of the withdrawal of an asset, we had an anti-abuse rule. People could try to say we avoid the giving away of a service for free by setting a price of €1. And the countermeasure was that if you do this small, very low price to closely related persons or staff members, then you have to compare with the minimum tax base, so with the tax base in case of a withdrawal. That means if you don't give an employee the truck for free for 2 days to use it for moving, but then you demand a payment of €1 so that you have a genuine service and a genuine consideration. That will nevertheless be compared with the minimum tax base under 10.5, which says now look to the withdrawal tax base, and if that's higher, then that is the tax base which has to be applied to these situations. Makes sense, because otherwise it would be too easy to avoid or circumvent the application of the withdrawal rules just by fixing a symbolic consideration. Okay, now I think I have demotivated, bored, or entertained you enough for today. So let's finish for today. Enjoy a small break and come back to the channel soon if you like. Okay, goodbye, ciao.